right, good morning, everybody. What's up? This is Cowboy, and it is now 8:32 a.m. EST. I got started about 1 or 2 minutes late. It does happen once in a while. Let's go ahead and throw everything up on the screen. And we're starting here, I guess, with the euro versus the dollar. And this is actually a key chart in the current environment because the dollar has been getting strong. When you see, and when I say the dollar getting strong, it's getting strong against other currencies, right? So when you see that happening, usually it means a couple things. For one thing, most everything relevant is traded against dollars, and it might be traded against other currencies elsewhere, right? But most of the world is going to have at least a finger in the U.S. markets. So when the dollar goes up, then almost everything is going to kind of take a little bit of a hit. And of course, a lot of currencies are also moving in step. So when the dollar goes up, the other currencies will go up at the same time as that. And so you do have kind of a dynamic when it comes to that sort of thing. So let's take a quick look here. What is this? The 5-minute chart might have a little bit of an opportunity here for a scalp. Let me take a quick look. Messy screen, got my algo up there. I usually don't have my algo quite so visible. Let's see here. Yeah, a little bit of a scalp opportunity. I don't know if I want to mess with that though. Such a, we should take a look at what's going to happen with the data. Is there any data? Is there any news coming out? Because you never want to scalp if there's news coming out. And nope, not really. There's some information coming out today, but nothing of note. So we don't have to worry too much about the news. Unfortunately, going long now kind of sucks because the signal for my algo came at 4 a.m. and I was not at the computer at that time. But if we take a look at the higher time frame, let's manipulate this so we don't have quite as much data on here. Okay. Good. We'll kind of take a higher time frame look just to see what's going on because the price has come to an area where it may want to move back up. It's been going down because the dollar's been strong. It looks like the dollar might be taking a break. Now you can see this on the euro as well as you can see it anywhere, like say on the Dixie, which is the dollar index. And it would look literally like the opposite of this. So, if you flip this upside down, you're looking basically at the dollar against most currencies, right? At least the chart of that. So I would probably use a Fibonacci tool to see where it might pop back up to. Now, the 382 is where it's going to go if the dollar is still staying strong and wants to continue to go up. Up, right? That's the 382 Fibonacci. So what I mean by all of that talk is that this is an impulse. Price went down and it went straight down pretty much, right? Didn't take a lot of breaks moving down. So it's one big move. And then I use a Fibonacci tool to map that out. I map out that impulse. And then these marks here, this 382, this 618, which the 618 is hard to see on the screen because of interference from the chart, but you got a 618, you got a 786. These lines here represent where price is most likely to go. And it's actually unknown why the Fibonacci works. The Fibonacci numbers are all over the place in the universe. They're in our body. They're in like pine cones, swirls. They're when whales go in circles and blow bubbles, it's like in the Fibonacci. It's for some reason in our universe, this Fibonacci number, it matters. This, especially the 1.618. That's the golden ratio. So generally, the most likely place for price to go is going to be the 618. It's almost the more likely, that's the golden ratio. That's just how things go. But if price is really, really directional, if the dollar is really, really strong pulling this down, then it might only go to that 382. So those are your two most likely places for it to go from a Fibonacci standpoint. However, there's more than just the Fibonacci. There's more data we can use to determine where price might go. So let's go ahead and take a look at the fixed range. Okay. Now the fixed range is going to take a look at volume nodes where, volume took place, if you will. Let's see here. Yeah. So the most volume the most trades happened right here, right above that 382. And then there's not a lot that happened right above that. So let me make this a little easier for everybody to see, because the chart is starting to get messy. But you see where these nodes stick out, where these lines stick out. You can see here that right here where the volume is sticking out, that's most likely where price wants to go. And then right above it, where there's no any nodes at all, where there's nothing, that's where price is not going to want to go. So that gives us a little more of an edge as to where price might go to if it goes up. And you can actually develop entire trades for this. It would be a swing trade. This move took about 2 weeks. So, it would probably take another 3 or 4 days at least, maybe a week to head back up. Let's see here. This move started September 30th. So that's like 3 weeks. So it might take a week for this to happen, right? What we might use this for, like for day traders or even swing traders, it might be more for kind of understanding which way price might be wanting to go, so we can plan out some of our trades. And it's kind of likely right now, and we're going to use some more data to refine this, but it's kind of likely that price is going to head up to here. Kind of likely, right? Because this was a very strong move, and the market tends to not go in the same direction forever. It tends to, retrace. Now there's a little more data on here, and this is kind of typical with charts. You see this big M pattern right here, where price made this M. Price also may want to head up and just grab the bottom of that M. That's a very likely place. It's a common scenario for price to go up just a little bit higher. Now that would be pushing into this blank area, so it wouldn't want to necessarily go past that. But on a more powerful move, or at least a powerful enough move, it's going to scrape, maybe almost hit that or come close to it. But again, the most likely place for price to want to go is going to be this red line in these volume nodes. And that's right at that 382. It's just right above that. So either way, once price gets into this region, it's also getting pretty close to the bottom of this M. And that's yet another reason, besides the space in those volume nodes, that will I'll use this square to map out right there. So it's not going to want to go past here, right? And then you have this resistance up here from the M. So there's a really high likelihood that price is going to go ahead and reverse once it gets up there. And when you have this kind of data, what you can do is make money. When you have this kind of data, you can essentially predict, not essentially, but you can predict to a degree of probability where price is going to go. Okay. And when you can predict where price is going to go, you can make money up or down. Okay. So this is trading, right? This isn't like investing, anything like that. This is trading. This is putting your money in the market, pulling it out either minutes, hours, or days later. Right. And that's how this is done. So this is just kind of a high time frame look on the euro. This is a solid look. This is very, very likely what's going to happen. So what I would then do is I would go to a lower time frame. And we'll notice here on the 3 hour, notice here the price has already started to move up, but you know what? I mean, it may not move up much farther. There are some areas where price is going to encounter resistance. Like here is one of them. Here's one of them, which is right at that 382. The top here, of course, that's where, like, the middle of this is where all that volume was on the fixed range. So, these are areas where price might not go, or it might actually head up there, even right here too, this little peak right here. It might pull back and then go up, and pull back and then go up. So these areas it doesn't mean that price will completely reverse and head down, but it does mean that price might pull back, gather some steam, and then head up after that. So this is how we use this data to make trades on a lower time frame. And each of these candles is a 3 hour candle. And this crush down here was extremely brutal. Very little pullbacks happening on the way back down. So, price at some point, price is going to want to come back up. And it appears that it may be doing it now. Now, it did attempt to rally up a few times. He had this one here, and then it kept going down, right? So it may just continue down as well. It's possible. it would mean that the dollar is getting very strong very quickly, which it has been for the past 3 weeks. And a lot of people have their eye on that. But there are some items on the higher time frame algos that tell me it's possible that this move might be done, uh, namely on the daily. However, when I say done, I mean temporarily done, because on the higher time frame on the weekly, this is still actually pretty bearish, meaning that the dollar is still strong. But I'm seeing a couple things in the algos that at least are going to show us we might get that move up to the 382. And then once we get up to 382, if that high time frame is still bearish, and it very well could be, the dollar might continue down, or continue up, I should say. But what's interesting is it's not really affecting the indices that much. Usually when the dollar is strong like that, your stocks start to go down, and we're not really seeing that, not too much. We saw a little pullback here and there, more like headline risk from the Middle East, but that's not what we're seeing right now. So just a quick look at that before I move on to the private live lab. Yeah, no, it's the indices march on. You know, they like the SP 500 and the Dow, they don't care. They just keep pushing up. And a quick look at Bitcoin, and then we'll go to the private live lab to analyze Bitcoin. Yeah, no, Bitcoin looking strong too. So Bitcoin, I'm in the I'm slightly bullish category, right? When price goes above 70,120, I'll be in the a little bit more bullish category. So I'm going to go ahead and end this here. Flip over to the private live lab. So what you want to do is zap the QR code in the top right-hand corner. When you zap that, it's going to take you to Algo Factory's website. What we do is we teach people how to build trading algorithms, and that whole thing that I just did on the screen, that's basic kind of that's basic stuff. We teach that, and then we also teach people how to build all this sort of all that data you saw at the bottom of the screen, this gobbledygook right here. We combine all that into algorithms, and then if you want to have it coded, you can find a coder and do that, and it'll look like these little tabs right here that you see. This green tab, price went down afterwards. I'm sorry, this was a red tab, price went down, green tab, price went up. That's a pretty good indicator. You can see it's performing very nicely, and that's an algo that I've built, and everybody can build their own. It's an awesome thing. So, all right, let's see here. Treat your job, upgrade your life, and don't forget,
join us or die.